With adding more design than that. I'm just going to make a note here, train crew, catering.
Good morning.
Good morning, coach.
Okay. Mm-mm-mm.
Just brewed me up a Vente squirrel poop coffee.
You got the good stuff.
Yeah, the smell takes a little getting used to, but it's got a nutty flavor.
I can imagine. Oh man. Hey James, morning. Something about James.
I argued against that. I agree. Are you arguing for Jackson?
But we have.
Yeah, that's what I was saying.
That dude already had the coffee.
Okay. What time is it? 7:36. Okay, give me like a minute or two. Let me just stretch for a bit, grab some water, and I'll be right with you. So please find your seat, ladies and gentlemen. Plane is about to take off.
How's everyone doing?
What's up, Voodoo?
So that indicator, the reason that I gave us another box indicator is it carries over historical days opening prices and it puts them on the right edge with a day count. So you can track like why this price is reacting off of 3 p.m. from, or sorry, 2 p.m., whatever your CST
Okay.
from a day ago. Or
Oh,
where the low that Kish traded from was the 3 o'clock from 4 days ago.
okay.
Oh,
Sounds interesting.
Other
I thought
thing,
there was more STDs, but no.
what?
I think you got plenty of
Standard
it.
deviations. What are you talking about?
Yeah, they're running out of penicillin, dude.
All good, all good. I'm back. Thanks to Mac and Voodoo for the in-flight entertainment. So, clearing everything off and going to work as usual. So first things first, what am I going to mark? What's the first thing I'm going to mark?
Let's go with our evening opening, 1700. 1800,
We're
sorry.
gonna go 2 p.m. We're gonna go 2 p.m. So we're gonna go 2 p.m. first, and then we're gonna grab 7:20. There we go. Then we're going to decide if this price level is going to be useful. So let's pop that in. And we can see since the start of the new trading day, we have traded to that level already. See that? So in terms of importance to how I'm going to execute, this is rendered useless because it's already traded. That goes that line. There we go. Monday 2 p.m. was, I think that was a short target yesterday as well. So that was traded too. And as far as I can tell, only Friday, August 1st, as a 2 p.m. that's not been traded too. So that's my analysis. Bam. So that's a good distance away. So realistically, since there is no news today, I'm not going to look for some majestic short. It's going to drop 300 points. No. It's not that far when you look at it like this, but still no. So let's do normal sensibly analysis. 720 open, let's see what's happening right there. So we have went below, tried to pull above, stay above. This is given very bearish. Cool, no problem. Now let's see where this puzzle fits into the big picture. So I'm going to take all of that off. And I'm going to get a rough view of what the day has been like. What I'm looking for, price patterns, price action structures that hints at ranges being created, willingness to run on that range, efficiency in the delivery. So with that being said, the low of the day is somewhere here. I'm going to, please don't crucify me. Bet somebody's going to crucify me still, despite me saying don't crucify me. And picking that low of the day. Somebody's going to crucify me still. The low of the day is below us, right? Let's grab that one. What's this delivery been like? One-sided, inefficient. So the next time we get super aggressive with lower prices, it's going to be roughly around here. So since we're above this level, logically, we want to go short. Now we're thinking, what's the likelihood that this just goes short and does not want to retrace? Because that's what you want to trade. You want to go short when the market is not likely to go against you and go higher. Imbalance created, deliver on top of the imbalance now. Push, no run on sell side. No run on sell side. Push, buy side run. So the highest high in here so that's most of the analysis. Now I ask myself the logical question, is this delivery starting at 7 a.m. or 7:20? I like you. Thank you. Error on my part. There we go. So, are we likely to retrace toward the open of the day or expand outside the range here? That's a question I need answered for myself. Since we've gotten runs on buy side liquidity and this broke lower, I have a buy side run, a sell side run, retracement. I'm thinking expansion. But this expansion that I want to leave right here in price will start with a retracement towards the open price of the day, which means for today and tomorrow, the delivery lower has enough reasons to grow legs and really tank. Okay. So now we get to reading weekly profiles. If this is Monday, started the new delivered, and this is viewed as Friday, then we could eyeball and say this is around Tuesday. So we have a Tuesday high of the week. Tuesday high of the week, we break down, we can see that internal runs were done here. Everything about this makes me bearish. I'm going to take away David just pointed at this high. Oh, I see why. I'm going to point to this high, which makes this guy our order block. Which makes instinctively the plan of the day something that looks like this. There we go. So bias for the day is going to be bearish. I'm going to be looking for short somewhere around here, and I'm going to expect it to go lower. I'm not expecting this high to get taken out again because it's already run internal. Again, whenever there's a run on liquidity and you don't expect them to run it again, should any type of volatility event come out and do that, you're looking for mitigation of whatever went up there. So it's 7:47. I have everything around entry, etc., etc., etc. I'm going to put my first position on right here. So there we go. Stops looking like roughly about 20.
And Kish, can I ask, I see that we're taking internal liquidity on the Friday, but when that new delivery starts, there's no part of you that wants Monday to run Friday's previous high. There we go.
Okay.
Because that's my initial thought, is because like when I'm framing that to the weekly profile, we have the Tuesday high of the week, Wednesday, Thursday, Friday retraces, but then this new delivery starts and I see some imbalances up here. And I see like this little fractal that we haven't pulled back up and swept there.
Mm-hmm.
So like my initial thought is like, I'm with you on everything here, like to this point. And I'm planning like the new weekly delivery.
Mm-hmm.
I'm saying like, okay, we had a Tuesday high of the week and then Friday retraced.
Feel like I'm losing parts of the conversation.
I might have dropped there for a second.
I don't know. It sounds like that. Intuitively, it sounds like that. But
I think
yeah.
you're right.
Okay. All right. I get what you're saying. It makes sense. We have our run on buy side, and then we fell. Some internal was taken. Some internal looks like it weren't taken. So how can you trust that it will not try to reach for any more internal liquidity before it goes?
Yeah.
Particularly because it's Monday, and we know the good book says Monday is not likely to create a high of the week unless we have Monday taking liquidity. Right?
Perfect.
Fully understand what you're saying. 100%. Because we've already closed below 720, and I've seen no attempt to close back above 720, I see no reason to force wanting a run here. However, being realistic, if I get a run here when I did not expect one, then that's going to be essentially what the double purge looks like, and then you start thinking mitigation. But as of right now, I don't see anything in this entire process that says I need to wait. Outside of like equities open, but no, everything here says I'm fine.
There's no news today as well.
Yes, we never like shorts on no news days. On principle, it's just wrong. Shorts on no news days.
And then like your additional thoughts here for like bearishness today. Our range that we're looking at here as well, its high has been ran. So you don't see a reason to double purge up here at all.
Nope. Since this is the high, the current high, it means that this is the last time we run buy side liquidity.
Yep.
So right here. If this is the last time we run buy side liquidity, I'd be looking left of this buy side run for lows. And if those get swept, dealing range logic. So intuitively, here's something that you can do. When you have your buy side run and you look left and you see your sell side, you could use that low like a mile marker. What for? Put that here. The first run on sell side that I want must be below the obvious lows that are here. It could be, there are a million ways to choose that low. You could look at the expansion here, look at the last FEG in the expansion, and look at the lows since that FEG. Since this is the FEG here, you'd be using this low. It got wicked right here. So for all intents and purposes, you would use this low and this FEG as your mile marker for lower prices. So just as a layer of added confidence, I'm going to slap that on. I'll take it off in a bit, but I just want you to see FEG, whenever you get this, old high, FEG, find support on that. This FEG is low to wherever we go is your range. So whenever you're thinking, there's a CSD up here and I want to short, but I don't know if it's really going to break down, you don't have to get in up here. You could use this as your confirmation for direction. Closing this, now I'm bearish. So if this is my mile marker and this makes me bearish, I should find something here that I can recognize to be bearish on. So let's look at what we got right there. What's this? Displacement through a FEG. That's filling the FEG. What happens when you have one candle creating an FEG and one candle filling it? Dot, dot, dot.
BPR.
BPR. So with that BPR in mind, this is a purge of the BPR. Because the BPR is what you'd want to see the market use to stay lower. They're running the BPR here. So anytime there's a high or a level that you don't expect to be run, and it gets run, the good book says, think mitigation or breakers. What that means is I can temporarily suspend the order block logic here and pay attention to the down candle that's right there. Coincidentally, both the down candle here and 720's open price is residing in the same neighborhood. So instinctively, that says to me the next push from price will originate here. We're bearish, so we want the push to be around lower. This is currently being held, not moving, blah, blah, blah. I would argue that it's probably waiting for the new hour, probably waiting for equity to open. But as far as what I want to do, where I want to see the price trade to, this is it.
Ish, don't you see these as relative equal highs that they can sweep before going lower? Or you're just paying attention to this because it's swept liquidity?
I'm paying attention to this because it's a liquidity.
Okay.
So on my probability scale, I think this has about 70% chance of being very nice. What's stopping it from being higher is on no news days usually carries an element of meh or oh my god, what was that? You've seen those before. Random spikes out of nowhere, no news, or somebody says something. Somebody suddenly decides to speak on a no news day, and that causes the market to get wild and do something. Those can be predicted. You can't predict somebody being crazy. But yeah. New hour is going to come in any moment now. And I'm going to lead on lower prices.
Good morning, Kish.
Good morning.
Just also because when I was in my pre-analysis or so, because in the previous days we've also been looking at the previous days 2 p.m. From 2 p.m. till now, the whole range has been balanced and this rejection has been coming off from there. Doesn't that concern also factor into your analysis? Because essentially we are in an efficient range and of course we could go up because I'm also looking at those like David was pointing out the bag that was up there. Based on principle, just to show based on mechanical models, I'm also in a short, but then a part of me has been concerned about that, which I wrote down in my notes as that, but wanted to ask, would you factor with that in or not?
So I don't see anything wrong with extra confidence. What I try to avoid is having too many moving parts in my analysis. Okay. So as far as today is concerned, I don't see a reason to be overly concerned with these highs. And I'll tell you why. Let's say this buy side run happened and we were still below here, and this was 720 in here. Then I would know I want this BPR to work. So I'd be looking at shorts, but I wouldn't be looking at a short that gets to the end of the earth because this is internal liquidity. So I would be expecting them to run this high, but I'd still want to short here. Does that make sense?
Oh, yes, it does.
So I'd be going short here and looking for something down here that could get the market to act as support. And that would have been this and the new range that we're sitting on top of. So we got this and break even. We're tracing. I'm not adding. Push. I'm trimming. Running down equity. I do that because every time the market delivers, that's the law of the delivery. And law of deliveries is where PDR is formed. And highs, of course. So if this is going to return and go higher, it's like going to do it off something that prints there. So I want to run down equity as it's touching that or trading through that. So heavy partials, we pull back. Heavy partials again. It starts being aggressive, out. But yeah, 30 seconds. Zoom in on the price action. Stuck inside the BPR. And yeah. 720 open is the mile marker as usual. You're looking for them to expand below here. The next time we close, I'd like that to be a heavy candle. I'd like that to close below this candle's open. And then once all that is done, it's just gone. What I'd not like is one of those classic new hour comes in, sweeps the previous hourly high, and then go down. I'd not like that. Even though I'm well aware of that. I wouldn't want to see that here. But there's no volatility. Usually you can expect those when like there's like volatility, or if it's like 9 o'clock. 9 a.m. is just usually messy like that. But I don't want to see that here. So let's put some lines on and make this puppy look good. For the persons who are not about that 50-point trade and all that madness, this is a good place to trim or close. For the persons who are not a fan of randomly going short because some guy said short, then you can start looking at this candle's open price here and look at the next time we close below it and CSD. First minute done, second minute doing standard stuff, sweeping one side. Seeing the name sleeping coach is making my eyes heavy. He's actually in boot camp.
Okay, so Kish, like, can we talk a little bit about like, okay, if this plan goes wrong
Mhm.
and we do take Monday's high, like even within Monday, we take this high, still just looking for a CSD up here, maybe a second purge of liquidity and then lower.
Mhm.
Okay.
So how I console myself on setups that are potentially wrong is I look at how did I lose this trade? Not like how did I lose this trade? What did I lose this trade because I didn't continue with what I was expecting, or did it invalidate the analysis itself? Because you can lose a trade and your analysis is still solid. Bad stop loss placement is the reason for so many losses. Good analysis, bad stop loss placement, or bad entries, lots of losses happen. So I like to look at what my loss looked like there, and then that kind of helps me. Should I go again? Or yeah, this is not for me. So a big spike for a double purge, followed by immediate aggressive pullback or something like that, getting below one of the this level in this case, since that's the only thing I have here. I'd still short a retracement. I'd not want that, but it is what it is.
And like even like one of the surprises I had coming into today was like we wanted like a heavy retracement like yesterday into the close. That was enough for you.
So we're talking about the longs we tried to take in here.
Oh
They were actually,
boy.
It was
Here.
earlier.
they were here.
Yeah, we tried to take some longs in here, and they didn't work out. So that's why I went long last night.
And this was enough for you.
I don't think I got that high. I think, did I get that high? I don't think so. I think I closed in here. Yeah, in here. I found it funny that you sent a message that said Kish is long. Like, how did you know?
I think David's taking those trades himself, but he's just pretending.
True. We spent so much time together. He's naturally seen him. Yeah, no news days, guys. Just meh.
We have, or of course, your feed is different, but on futures, that'll ask you CSD on M4. But we're still rejecting the open price.
Yes, sir.
Kish, since we wanted longs so bad yesterday, towards the afternoon session and towards the end, when today started, are you not looking at again longs because you didn't get what you want yesterday?
Got the long yesterday. Last night.
I mean, okay.
You mean
fine.
like how far up would I want this to
Yeah,
go?
yeah.
Okay. All right, let's take a look. yesterday we were focused on two scenarios playing out in here. Remember them? The double
Yeah.
purge.
Mitigation and a bag below.
Right. This was the high that we're expecting to be the high of the week. And we said that if they try to double purge this again, then mitigation. If no mitigation, then we're focused on below here, breakaway gaps or FPGs or something in here. Something is going to print after this, we close below this low, and you will be able to recognize it. I saw a lot of entries, so I know a lot of you got that short after we closed below that low. And yeah, pretty much that. So I wanted to see a bigger push because I wanted to see if they wanted to make this null and void. I don't place a whole lot of importance on this gap, particularly because it was in a consolidation, but it's not far-fetched to see it and think, but that's a gap. How do you not want to see a gap get traded to? That's why I was leaning on a bigger push, but it said no. Can't fight with that.
And then like even with today's plan though, like when we speak from a weekly profile perspective, the only like issue I have with the plan this morning is you're planning on this being a Monday high of the week without it taking liquidity.
That's fair. That's fair. I can solidly say if that's a concern, it makes sense. Could it have been an oversight? Yes. Fully. There's nothing I can say that says that cannot happen. I'm leaning on if that is going to happen, it's going to invalidate this. So if that idea is not invalidated, then I don't see a reason to look for that. Because then if I'm expecting that, then we shouldn't be trading until after it is open.
And that was my like original thought when I sat down. Liquidity.
Not trading until it is open?
Or just at least until 9:40 or 8:40 for you, because that would be Tuesday.
Fair enough.
And like, not to like dig in on this or anything, but like, wouldn't you consider like this BPR to be invalidated with us closing above it?
So this BPR here was added confluence and not the reason for our entry. Remember that? But
Okay.
I get it. Fair enough. We framed the trade. We framed confluence. The added confluence is failing. Do we scale out? Personally, no for me. But if you or anybody else think that, and that's now a little bit sus, because then sure. But I'm not going to close this because it was framed on this guy being the order block.
Key level inside of the order block up here.
Fair enough.
I've got one limit resting there just in case we pop up.
All good. Confluence, what I want to see, close below that. That's what I want to see.
And why is your importance here of leaving the 720 and it's this down candle open again? That's your mitigation point?
Yeah.
So
So if you, we could even say a close below 720 is sufficient.
would you add if we close below that down candle?
Depending on the body. If it's an
Okay.
aggressive close and we wick higher, and let's say the M4 closes, the new M4 opens and wicks up, I'd consider adding there. If you're aggressive, adding here, seeing it wick here and fail. Again, if you have that risk appetite, that's adding, these are adding territories as well.
AKA nothing actually happening, no CSD or anything.
My plan was to add that after we break below the down candle.
That makes sense. So it's hard to like explain why certain entries should make sense because we spend a whole lot of time in the initial part of our trading career being afraid of trading against or going short in a green candle. Unless it's a CSD, you don't want to do that. Get it, no problem. But there are some things that experience will show you, and one of them is what are the precursors to a move happening. I want to trade the move. What are the things that happen before the move? So you have to start kind of like dissecting the move itself. It happens in 4 stages: 1, 2, 3, 4, like BPRs. Not BPRs. What's it called again? Dealing ranges. Buy side, sell side, retrace, and expand. If I can track what's happening, I know which one of those to expect next. So trading it becomes easier. What also becomes easier is anticipating how it's going to print. Having a key level here, confirmation close, wick. Something about that just doesn't tell, it just does not feel like this is wrong. So it becomes a risk appetite at that point.
Because I just think it's just time why it's not moving yet.
Yeah, I mean, if we look at the delivery here from a key level standpoint, right? It's exactly where you want it to enter, but it's just wasting a whole lot of time here. So it could stay here for a little bit. That's what I'm saying. If I get wicked out or stopped out of this, I'm going to be focused on how I get taken out versus, oh my God, I took a loss. It's the end of the world. Losses are part of the game. As long as you win more than you lose, then no big deal. So if I'm getting a 10-point stop or a cut at 10 points or whatever, or a 20-point stop, and then I make 2, 3, 50-point trades, we're up.
Easier said.
Huh?
I said easier said than done.
That's true. That's true. I won't argue that. I won't argue that. What's going on here?
Get him.
So I am not going to, spew the usual confidence this time, David, until this.
Because you don't have.
Usually I'd be clapping back, you know that. But right now, we haven't gotten below that yet.
Right now you're sweating.
Not sweating per se, but I'm open to you starting the day +1, and then in round 3
you come back.
But yeah, again, confidence in this setup is going to come from them getting back below here. So if it's staying here, all I'm thinking about it is just wasting time until then, just wasting time until then.
Hey, Kish.
Hola.
Hola. Quick question. I just got on. Let's suppose I'm in the trade. This is a question more of the, let's say, psychology sort of side of things. Let's say I'm in the trade and I'm sweating, like David just said. And let's say the trade comes back to break even. Would you say, just for the sake of, stop sweating and look ahead, would you say it's a bad habit just to close it, stop trusting your process, stop trusting why you enter the trade and just close it break even though maybe that's the start of the run that would make you win money? What would you say about that?
Absolutely. So, and this is why it's very important that we analyze our losing trades. There are a lot of times we've all seen the memes. A lot of times you enter a position and you're in drawdown, and then the prior start just get me back to break even and I'll close. and then it gets to break even, and you don't close, and then it goes right back to where it was coming from, and then you take a bigger loss. Whenever that happens, I don't pay attention to the fact that I lost the trade. I paid attention to what were the errors in the analysis itself. Because if the analysis is sound, then execution shouldn't be a problem. So try to focus on the things you can control. Suppose suppose you're looking at a red line that David is looking at. I'm in here. I'm in drawdown all the way to David's red line. What if entering at David's red line, it moves below my entry 10 points, 20 points? There to there is, not a bad trade. So if you're looking at that and you say, I'm glad I did that because whatever, and you cut the trade and it comes back and then it plays around a little bit more and then it moves later. As far as controlling the bleeding goes, that's not bad. But if you spend the bulk of your time looking at every time I'm in a trade, I lose, you're going to create that habit that has you always betting against yourself. I've seen a lot of persons enter trades and then frame every reason why it should go against them.
That's my specialty.
Your superpower. But yeah, not a fan of that mindset.
We did end up bagging that low last night as well.
Thank you, Fish.
All good. I don't think a lot of persons do this, and I don't think there's a solid fix for it in terms of something practical. It has to be something that you look at and you say, I shouldn't do this. In the same way, you win Monday, win Tuesday, win Thursday, win Friday. No, sorry. Win Monday, win Tuesday, win Wednesday, win Thursday. And you take a loss on Friday that's so big it wipes away everything. And you say, how do I win 4 days out of 5 and end the week red? Madness.
That's life.
Madness. That's what you say. Madness. Absolute madness. But yeah. Eight, 18, 12 minutes to equities open. I don't like the fact that it's all the way up here. I don't like that. I don't like equity open spike being close to my stop.
If this is our key level, Kish, can you just go ahead and read this delivery at this key level for me?
The red one?
Yes.
Delivery, high taken, M1 order block. Lower. Well, M1 order block, CSD lower. So for David.
No, I'm not on the M1.
Oh. That's shocker.
How mature.
That's a
Amazing.
first. That's a
Whoa.
first. Oh,
Whoa.
someone's changing.
But yeah,
Just pointless right here.
I would say the next candle that prints is going to be the candle that makes or breaks this setup. The next candle, since we've done all that retracement, the high has been taken. I believe the next candle should be very decisive. Very decisive. There's absolutely nothing left, in my opinion, to do here if this is going to run now. If it's not going to run now, then it's just going to waddle longer, and we don't have time for that. It's Independence Day here, which means it's National Beach Day. So I'm not up for a long trading day. 8:20,
Beaches will be crowded.
10. Yeah, it's going to be crowded, so you have to find the good spots early.
So, Kish,
I
like,
thought you had the private beach.
Ah,
yeah, I did too, Mac. So at what point though, so this whole plan we've just framed out, great. In about 10 minutes, it'll be broke to the upside. And then at what point, are you saying your entire thesis now is wrong? And we are getting that large retracement up to like the bag or dark pool that we had yesterday.
Okay, that's a good question. Let's take a look at what's going on here. As far as direction goes, you understand why I'm bearish. So I don't need to go into why
Yeah.
I'm bearish.
Yeah.
Let's talk about the setup, in particularly entry and stop loss.
Well, and like just to pause you for a second, like you're bearish because like out of the decision tree of like expanding outside the range or retracing to the open, you're picking retrace to the open.
Yeah, first of all, yes. Two things are likely here. Retrace to open, expand outside the range. I am looking for this to expand outside the range, but the direction it's expanding is towards the open. Does that make sense?
Yeah, I'm with you.
So I'm looking for it to go lower, but that lower run is not to hit daily open and then come back up. That run lower is to go lower and stay lower. So if you remember, where is it? This, up to the next screen for a second. This. You remember on Monday, I believe, we framed this. There should be Bitcoin analysis here. Oh, it's Bitcoin M4. My bad. Sorry. Remember this that we framed on Monday? We're looking for NASDAQ to trade all the way higher, run this, and then the delivery looks like this.
Yep.
Let's move this over a little bit. We got this part, right?
Yep.
We got that pullback, right?
Yep. And you got this.
We got the run on the high, right?
Yep.
We're getting this now, right?
Yep.
We tried to trade this last night, right?
Yep.
So next up on the menu is, where do we go next? Dora voice. Right. So that's it. No. So that's what you look. I'm looking for this to break down. And again, long-term NASDAQ drawn liquidity for me is here. Here?
I mean, Kish, playing the devil's advocate, isn't this 50% significant
Negative.
of this down candle?
Negative.
Because I mean, we didn't break this low yet, right? It's
And
still
that's
supporting. So
And that's why. That's exactly why. This 50% becomes important if this candle's low is taken, because this is the delivery to the level. So the P areas get formed at the low of the delivery to the level.
oh, so we have not taken the low. Only after it's been taken, then it will be
Right.
important.
So if this is bullish, if let's say I'm wrong about this drawdown here and this is bullish, it's going to wick that low on August 1st and then go higher. Outside of that, I will not allow it to go higher. Kidding. But yeah, lower prices. So it's 824.
Manage, add,
candle.
add.
No, right?
Break even.
Break even. What? Oh, I see.
I didn't.
No, Kish just got back.
So see what we're saying a while ago? So let's just pop to the M4, the M1 to explain. So that's the high of the delivery. That's where the P areas get formed. That's where the entry prints. So when you're seeing that, the moment you see this get taken, I anticipate what the M1 is going to look like inside here. And that's why I'm saying this M4 candle is going to be decisive. It's going to show you exactly what you want to see, which is either wreck, Kish and take his stop, or get him. So now, I know you're going to get excited because it's moving in your favor. Please keep in mind that this here is the mile marker. With close below, what do you want to do? What do you want to see now from the market?
Okay, why is that the mile marker?
Speed.
Mitigation.
There we go. So, cute little theory from the lucky alien. There are times when I'm not using this. I don't want to have all of the joins. I'll use the annotate function instead. There are times when a range is printed And the first instinct is liquidity above, liquidity below. Right? Everybody knows how to do this drawing. How the range is printed gives you a whole lot of insights to if it's going to get taken. Let's do this. This is the first high housing liquidity, which means in here, order blocks form, which means this is what you use for entries. If you are bearish on that high and it gets run, then that's where your PDR is going to form and you go short. This is not used for entry. That's used for direction. Direction. Dot. I'll do it in a direction. That's a direction. So what you do when you have breakaway gap or FEG right there, and it must be at the high that ran the liquidity. You use this for directional premise. What if there's no FEGs there and it's just a run on a high, run on a high, run on a high? It means down candle there, its open price is mitigation, which means that. Hope that makes sense. Maybe it won't make sense, no, but it will make sense.
Couldn't we use this as mitigation?
Left to right. Ah, missed it. Daniel, I blame you. Get in.
There, weren't you?
I just took out the phone. I took out the phone to add.
To
'Cause I'm
add
like-
50 more? Come on. I did it for you.
God damn it, Mac.
No, I'm like, we got everything we wanted here. We knew that we wanted to add there, and it's pulling back all the way up here. And I saw this up candle. I'm like, I should be able to get away with that. And I was about to. But no worries. I'm already in the trade. You know, it's not like I'm missing out on anything.
Can add now.
It's open. 2 minutes to open.
And Kish, like, this is just like the pattern trader in me, but like, I always mark this, like every day on our call, I will mark that. You never will like give significance to like that particular key level. And like 8 times out of 10, we will still go wicket like this. Why is it that like you don't ever like stress that?
Good question. So if you're trading, why did I start out with if you're trading? The most important thing is not the entry fractal. And at that key level, you're looking at entry fractal. So I have a hierarchy for how I look at setups. Can I see why a particular direction should be favored? Yes or no? If I can see that, I don't need to go and validate why it should go lower. Like if I have a bias, I don't need to search for a bias. So if I look at this and I can see internal order block, this should be going lower. Unless I'm trying to get a perfect entry, all I need to focus on is getting a short inside here.
Okay.
Does that make sense? Like, you get why I'm saying that?
Yes, I do. I think it's just me because more like I know you're a precision junkie as well, but like your hierarchy of like direction first and then entry, like you stress that, which I mean I think is the better thing to do. But yeah. And then so like your plan then for the rest of the day is this is Monday high of the week and it's a one-sided week to the downside.
Yep. Too slow.
Oh, I missed my ad there by 1 tick.
I'm letting my trigger finger.
Fine. I'm not going to try to get in again. This is now telling me that shouldn't be in. Because I missed add-ons twice in this pretty much the exact same place. Twice. Fine, you win, Nasdaq, you win.
Or David won.
No, you heard David's order getting filled. Fine.
That's the ad. That's the ad. 20 more.
Fine. I'm gonna do what I said I'd do today, which is to have a short trading day, not try to stay at the charts too much, and just enjoy my independence celebrations. But yes, equity is open here. This first 2 minutes of equity is open being wild is normal. I'm not overly excited about the trade moving in my favor. I am only pissed about it not getting me in.
Don't worry, here it comes.
And then taking me out.
Did you trim anything there? Like, to me, that wasn't even trimmable.
I did. That was a full stop. I did nothing there, David.
Same.
Nothing.
Same here.
Nothing at all.
Well. Beach day is cancelled.
It's canceled every day. You're here till 4 p.m.
Right.
regardless.
No. What time is it? 8:31.
8:32 and we go.
Oh, wait. Let's not be crazy.
I left out the last part. Dot.
Yeah. That loss kind of tickled me though, if I'm being real.
Just normal open.
Yeah, it is normal open wildness, but still.
Didn't expect it to be this wild though.
If we take that high, there's a bag there.
My broker frozen. Ow. Yeah. All right. Getting ready to sell in 10 seconds.
Bro.
No bag here.
You're not even gonna wait for M4 or anything.
I'm going to expect, so I just shorted. I'm going to expect the M4 to just snap back now.
Bro. Everyone just mark it in as like we're blasting higher.
No.
What are you shorting from? Or you're
The
or
high
you
of-
wanting to, or
I
you just want
shorted
to
the
see
high
a
of
failed
832.
expansion?
The high of 832.
Okay.
I expect at least one person to say, why the high of 832?
No, we get it. Just pull out your magic ball.
Only legends can do that.
Good morning, Kish.
His voice sounds oddly familiar.
It is. It's Erica.
Erica.
I was curious if you could explain some more when you talk about the PDA arrays form at the highs and the lows. I must have missed that along the line.
Okay. I'm going to switch this to M1 because I'm using the 832 high just so I can visually manage my trade if I need to. So this is what I'm gonna call it experience has shown me. It could just be my interpretation, but it's something that it's proven to be consistent. Reversals or expansions don't happen in the middle of random places. You don't see the market trading somewhere and it just stops randomly. Usually a reversal is happening when it's taking a high or taking a low. The PDA arrays that form when highs and lows are taken are likely order blocks or rejection blocks, right? So experience has shown it becomes easier to anticipate if an order block is likely to form if you can see the level it should form at versus seeing a down candle, seeing a CSD, and then saying this is an order block. Fair?
Yes. So the idea of external liquidity rather than internal.
Right. So I took that idea and I said, if that's how it printed for order blocks, Assume that's how it's printed for every other PD array. And what I did was look for that order of delivery for all PD arrays. And it was consistent. Wait, this is Bankaholic. Bankaholic went long. Took our stops. And that break even. What do you feel about that, David?
I say he flipped the coin the right direction.
Let's get him.
A legitimate question though, Kitch, here for me is like, how do you justify those stops when you just market enter before an M1 CSD and like it just explodes through your entry? Like that to me, like when I like reflect on those, I'm like, what the fuck are you doing, bud?
Okay, so remember, entry fractals are a dime a dozen. Narrative is always consistent. It's easy to find a narrative. We found the narrative. The narrative is this is going lower, right?
Got that short.
Yeah. I'm 3x ... positions in that short. That loss is irrelevant to me now. But anyway, narrative first. We found the narrative of this being bearish. Cool?
Yeah.
Yes?
Yeah.
Okay. Let's go back to import. I don't need M1 anymore. We found a narrative of why they should be going lower. Cool. We found a logical entry. Cool. There is nothing here that says don't short unless it spikes through the high and does something crazy. But around volatile times, there can be unfriendly delivery. What if this was not equities open and this was the middle of, I don't know, the hour? Would you expect something like this to happen?
No.
No. If this is happening at equities open or there was like a volatile event, I would not allow that to invalidate my idea. I just say, okay, I see what you're doing. I'll just wait. I'm going to look for this, and then trade. But I'm always doing that, regardless of volatility or not. I'm always looking for if this, then that reasoning for my setups. Always. This is just one of them. So we framed everything here for the short. Beautiful. Equities open was wild. Like there's no justifying, oh my God, it's equities open and it was wild. Fair enough. I'm still short. How do I find a short around equities open if it spikes?
832.
832. So when I was saying 10 seconds until the entry forms, it's because 832 candles almost closing. I shorted into this.
I got stopped on the second one.
You got stopped in this one?
Yeah.
And then
I
you
waited. Yeah, I waited for that, and then I'm writing this down now to open.
Pulling back to break even.
And that's what I'm saying. That's what I'm saying. So these are things that happen in your trading career, and you don't try to justify them. You don't try to justify why you got a loss here. We know we got stopped here because it was equities open. So and this is how I got over this fear. Open price is here, this down candle. This is what David doesn't like. I told myself most volatility is noise. Stop trying to vilify the market or stop trying to tell yourself that you're not enough. Understand that the manipulation in these markets is trying to do exactly that. Have you losing focus? So learn to see through the manipulation. What does that mean for me? Wait, I have too many positions on to not trim. I mean, let's not be silly.
Did you say 20 positions? 50 lots
I said
each?
too many. I had 3 positions on, that's it. Cool, trimmed. So this is what I'm saying, right? Learn to see through the manipulation. So you want to look at what the price action was like before and after manipulation. So equities open is this down candle. From here, you can look at it two ways. If you're just looking at 832, then you take off everything, including 832, and you look at the market like that. If you're thinking from the start of manipulation to the end of manipulation will include all the manipulation, look at the last closing price before equities open and the first time we got there, which would have been here. So then you take off all of this. Just get it off of your chart. Look at the delivery without that equities open noise. Does this delivery make sense? What's happening at the line? Imagine this green candle was right next to this. Does that make sense?
Yeah.
If that makes sense, and you have mile markers like this high and all that, and you can see how those are respected without the noise, then you know it's just noise. And then you can plan for it. What do you plan for it? If I'm looking at the open of any volatile event, let's say it's 9 o'clock. Tag like mark 9 o'clock open price. See what it does. If you're bearish, I'm gonna use a bearish example to kind of support the idea here. If you're bearish and 9 o'clock open, let's change this to dark. And 9 o'clock open goes higher. Mark the open. Tell yourself, once it gets back below the open, I'll see what I need to see. If there's nothing on the left that it should have reached for, like untapped liquidity, anticipate the delivery after the noise to do that. Okay? Anticipate that the noise is irrelevant and everything that should be done will be done after the noise. So you can start anticipating when a deep retracement is likely versus when I just want to see this print at that level and that is it. It sounds crazy at first until you start practicing it and you start seeing how you can literally remove the noise from your analysis. Remove the noise from your analysis and life is good. So yeah, I trimmed, but I didn't go break even. I don't think I need to, but I am going to because I'm not crazy.
Using that as a BPR?
I honestly haven't looked at exactly what's happening on the chart because I was talking and I'm going break even on my setups now. All right, 1 second, 112. And lastly, this one here. All right, what were you saying now? If I'm using this as a BPR, we can use this as a BPR, or we could extend out what we had before the noise. That was a high before the noise. This is the order block before the noise. I would not want to see it get back above. This is the green candle. So let me take off the RR2.
So, or yeah, go ahead.
No, you can't talk. I'm just gonna.
So
this is as high as I want it to go.
You take 3 up here. You take maybe 2 off here or 1 off here.
I think 80% of all 3 off here.
Okay.
Is that 80%? 4 with a 5, 80. Yes, 80%. You want to see my execution, David?
CSD. We're closing the BPR though.
Did you take anything off, David? I feel like you didn't.
No, I did. I only had 2. I only had 2, so I took 1 off. But
Okay.
I mean, I'll pretty much be break even after that first loss.
What side did you have on the first loss? All right, all my runners taken. That's strange. Because I'm like on my feed, we're all the way up here. So here is the execution, David. Let me just encompass everything and send a screenshot. Bam. I'm gonna post it right in the.
What I find crazy, like if I can be honest, what I find crazy like a lot about what you do is like somehow you're able to frame narrative. And even when you frame narrative incorrectly, you still get these moves. Like, cause you trust your narrative, like over the entry fractals, over like all the PD arrays. And like your narrative for this morning can be utterly wrong. This whole move can be like the complete opposite of what's actually happening. And you'll still like get away with it.
Not sure.
Like
Oh,
it's
I
just
defend
interesting
myself.
because like you stress narrative as far as like we need to know narrative direction. And like this is a good example of me of like this could just blast higher and the one side higher now. But like even still how you framed narrative, it was enough for you to get in and get out.
Yeah, I'm still positive that this is going to go lower. I'm debating whether or not I want to.
Would you enter again? I was just about to ask
That's
you.
what I'm debating right now. Do I want to enter again? Because I don't want to enter down here. I do not want to enter up here. Entering up here looks cool for the screenshots. But I don't want to
now
enter
that
down here.
they are like
Until
attempting
they
to
close
run
that
high.
PPR.
If they put an order block here, then maybe I'll consider. That's my plan for now.
Okay, I see what you mean. Tuesday high of the week type of vibe.
Yeah.
But again, so this is rendered useless now. Keep my charts clean. This is rendered useless. This is rendered useless. So these are the only useful markings on the chart. I still wanted a Monday high of the week, so I'm low-key betting against the high being taken. And I'm looking for the first candle high that prints below here. So once this breaks down and I get a candle high below the blue line, I'm going to use the blue line, that candle high, and try to short above that candle high.
Dark pool to the upside territory.
So now it's officially a new high. Yeah, I'm not going to sell above here though. I don't like the idea of selling up there.
What do you think of
Something
buying?
feels wrong. Say that again?
What do you think of buying?
No.
This should be the same like logic applied as yesterday where we had a range, range high taken. We should
dot. Put a down candle there, trade higher.
like if you zoom out a little bit, our like 1240 or our 1240 range to like 2 a.m. or whatever, range high taken, or it was like range high here taken. We get a close above with a down candle or anything there. This is gone to the upside.
So again, I'll always give you my advice. And my advice is I'm not going to long this. My advice is longing this is a little bit on the mad side of life. I'd rather trade Moan's idea and just short above here. Correct. Myth.
You wait for M1 order block or M4?
I don't think it should matter. What should matter is how close the entry is going to be to this high. I think that's more important. So if this M1 candle pulls back, Mon, you can probably get away with a short.
I'm in a short now.
Oh, I just pulled up M1 on my phone and like looking at it like, is it worth it?
It didn't pull back enough.
Yeah, I didn't pull back enough to get in. For anybody who's watching.
I was watching the M1, so I just took it.
Yeah.
Moan has those nimble fingers.
Yeah.
It says Mon is a degenerate.
He says.
So for David, if you're still looking at higher prices, then this down candle is your order block candidate. You'd want them to close above the open and then try to get the high.
Yeah, I mean, that's like the key line in the sand for me. Like, it's either we reverse where the dark pool should print, or like we create the dark pool and we move.
So I'm going to be a little bit of a degen too.
Oh boy.
When this closes, if it wicks that FEG, I'm going to sell it hard.
Hey, I had the same thing marked.
Yes. See, David, it's not just me.
Yeah, you created a whole army of agents.
At least now following this process, I'm only trading one side of the market, so I'm not looking for longs. I'm only looking for shorts. So
Yes.
that helps.
And it's easier to find confirmation when you have a something solid.
Direction.
Yeah, I don't think it likes us. It's not doing what David is bidding the market higher. But at least Moan got it. That's a win. That's like
Yay.
almost 40 points.
Yeah.
It's a lot. It's a lot. But again, it's pulling up to 720 open. I don't mind. I don't have to take another trade. This was very good to me because I put 3 positions on. So I can wait or I could end my day. But
Did you only have one on for the first short, Kish?
I had 2 on for the first short. No reason to. I just wanted to. And I'm open enough with myself to know that I didn't need to put 2 positions there, but I wanted to. So if I lose that and the loss is bigger than I would have liked, I'm going to own that and not, do anything crazy. But something I want to bring to your attention. I'll do that another time. Don't worry. Don't worry. Don't worry. So we hit 720, trading back to the FEG at 1 short. Survey says full DJ mode for David.
Wouldn't it have been better if they had closed below the FVG? I mean, 720 and then retraced to FVG and short.
Say it again?
I mean, it would have been better if they had closed below 720, retraced back to the FVG and another short.
Always. But again, left to right. With or without.
I mean,
720, we wanted to sell that, right?
yeah, but it gives that feeling that 720 is holding.
I mean,
and that down candle is like a sus of an order block.
Yeah, a little bit of drawdown. I think this is one of the best parts about trading, what I'm doing now, where the size you put on here when you make money is not the size you put on here when you're taking additional trades. I think that has to be one of the best risk management strategies ever built. Because you could easily, because I took that loss and I'm like, I'm not mad or upset about it because it does not take away the profit I made here. But it is what it is. David's order block looking like it wants to get validated.
But Kish, like, this is like what I don't ever get about like your management. That additional loss that you just took right there, that I know you took, that didn't take you negative now.
Because of the size.
His second trade is bigger than the first one.
So think about
which
this.
Sizes.
Wait, right? I just assume that this is something everybody does. That's why I brought it up so casually. Picture this scenario. It's equities open. You frame a setup. You put 10 contracts on. You make money. You're good. You know that you're way over your daily profit target. Cool? Later on, I don't know, in the evening, you see something and you say, oh, this is a nice trader. How much of the morning profit would you risk on that setup? Because if you think about it, the second trade that you're taking now is no longer oh, I need to make my daily profit target. You've already done that. It's no, I want to take this trade because I want to be right about it. So you have to recognize those emotions and then manage risk accordingly. In the same way, if you're entering at 8:58 and there's news at 9 o'clock, you're not going to put full size on. Everybody knows that. It's the same thing. So there are circumstances under which you automatically manage risk. I'm not afraid to take a loss on any setup I frame, but I'm afraid to take big losses on setups that I shouldn't.
So, like, just for clarity purposes, you make 50 points on 5 lots here, or whatever it was for you. Then you take this with what, 1 lot?
10 lots. I put 10 lot here. I had 3 positions here. Remember that? 3.
So, Kish, how many positions you had when we took the first loss?
Yeah, because like you being positive at this point doesn't add up to me.
Look at this. Look in the public group. I sent the screenshot. You can see everything there. There's no hiding it. Look at it. If I take trying to replicate not doing such a good job replicating.
Yeah, the risk.
If I take a loss there, right? Walk with me, right? Let's say I take 2 full size max positions losses here. I didn't, but just to show you the numbers. Let's say I didn't change my lot size at all. And I took 2 losses here at full 20-point loss. To make the calculations easy, let's say I lost $1 for each position. Well, it's 20 points. So let's say $2. So 2 positions, $2 loss each. That's a $4 loss, right? Assume I don't change lot size and I go short here at 100 and I go all the way to 50. 3 times, well, $5 would have been $15. And if I take 4 each, I make 12. 3 4 is 12 and in runners, right? So I would have lost 4 and made 12. I'm still up 8. Fair? Now, if I reduce risk and take a smaller loss here, how is that taking my 8 into negative?
Yeah, I mean, like your ability to like risk manage there is obviously superior.
No, it's not anything superior. It's just proper risk management.
But how do you know, like, how do you know to scale down to 1 on this?
Because I made money here for the day in a day where I plan to have a short day. Continuing to trade after you make money on a day that you said you would stop is the recipe for almost 99% of traders giving profits back. I didn't start trading yesterday. These are things I've done before. I've made money and then give it back and then gone into red and then gone into more red and then sit with myself like a stupid person and say, why did you do that? So how many months and years of doing that do you need to do before you start saying, I know this pattern is where I go back into red.
Yeah,
How many persons are doing challenges and they did that? Your first trade of the day, 1%, 0.5%, 1.5%. You say you're done, but it's super early in the day. You see another setup. You don't size down. You take the same trade. You take a loss. You take another loss because you're chasing the storyline, and another loss, and another loss. What happens then? You erode all that profit. So if you sit with yourself and you sit in that self-loathing, because it really is, like, nobody can tell me not to self-loathe in that position. How the hell am I up my profit target for the day and I lose it back and I don't feel like a stupid person? I have to. And I tell myself that. I'm not hating myself, but I'm telling, hey, listen, man, if you continue doing this, you'll never achieve what you want to achieve. Never. So you have to stop it. But then there's going to be that ego element where, but I feel correct on this position. How do I control my ego on the second trades as well as allow myself to grow by taking a setup that makes sense to me? Cut the risk.
Yeah, because like for me, I'll just go standard, like I'll just go the same size.
Okay. Let me ask you a question, right? If you put two contracts here and you get a 20-point stop, I don't need to know what the number is, right?
Okay.
Two contracts, you're down, let's say 2 times 20, 40 points. You're down 40 points. Cool?
Okay.
3 contracts, you're up 150 points. This is 50 points.
Yeah, but why are you sizing up on this one?
If we wanted lower prices and equities open spike happened, my first thought goes, where can I get back in the market?
Kish, normally what we do is we add like same 2 contracts. I wouldn't be putting like 6 double, I mean, extra 1.
Oh no,
So
I
if
get
we-
that. I get that. I get that. I'm not telling you to do this. I'm just explaining what I did.
No, I mean, if we are speaking from like David's standpoint, it's like, okay, we took a 40 point on 2 contracts, and then we enter another 2, and we are up what, 100. So that's we have
Pretty much.
60 in the back, right?
But you're only
And
closing
then-
half of that. So you're really only up like 10.
But then here's the thing. Here's the thing, David. Here's the thing. Here's the thing. Risk management goes hand in hand with money management. That's why risk management is always taught or shared as being personal. I'm not trading futures. This is something that we know. So I don't have some of the luxuries you have, and you don't have some of the luxuries I have in terms of CFDs. You can't shave 80% off of 2 contracts, but I can shave 80% off a 50 lot. So instinctively, our trade managements have to be different, which means sometimes if you don't have the luxury of partial close, it's easier to see that you can close if you plan your week from a monetary standpoint like this. If I plan to make $6,000 every month, that's $1,500 weekly. If I plan to make $1,500 weekly, that's $300 daily. If I'm trading 1 contract, how many points do I need to make $300 daily on 1 setup? If I'm trading 1 contract, no, let me get through. If I'm trading 1 contract, how many points do I need to make on 2 trades to get $300?
75 points a trade.
So you create what that looks like for you, and then you say, my account size is this. I don't, even though the plan is framed around 1 contract, I have the capability of using 2, 3, 4, 5. So now the pip target changes. If you needed 75, as you said, on 1 contract, how much do you need when you're using 2? 35.5 or something along that line? 37.5? There. Are you taking 2 trades for the day? 2 trades, 3 trades? What are you doing? How many times can you get a 30-point trade in a day? Easy. And then sometimes you could get larger trades. So if you know that you need 30 points and your trade is running 40 points, you're not. I'm not going to say you're not, because you couldn't. You shouldn't think about just taking partials. You should think about sticking to the plan. I'm not taking partials, I'm closing. A lot of persons, and we see it a lot on the calls, will tell me that they're closing here instead of taking partials. If I'll say, how did you manage? Did you take partials? No, I closed full. Okay, cool, no problem. There are certain parts of trading that has to be tailored to the individual. Futures versus CFD is forever the debate, but that's always going to be one of them. How futures traders manage or futures traders size, all that is always going to be important. But yeah.
Yeah, like that. And let me see, I think I took 3 trades,
Your break even still?
like 1 trade away from max drawdown after that.
Wait, what? But this was a bigger win than this loss.
So I think I took like a 30. I bagged 45 on 1 lot here. And then I lost on 4 lots, like 120 on that.
You lost 120 points?
Well, no, on 4 lots, it was like a 25-point stop times 4, so like 100.
How many contracts did you use here?
That one I used 4. Or no. On the first stop, I took 4, and then I sized down to 2. So this like gave me here only got me 50 on 1, and then I got break even, and then I took another 4 lots here. That's why like, I always find it like impressive, like your management, like how you just ended up green with the narrative complete. And
all right, so pause for a second, right? You should know this. Maybe the others on the call won't know this, but the guys in the group should know this. Even if I ended all of these trades at break even, I'd still be up for the day.
Yeah, that's crazy to me.
No, it's not crazy to you, David, because I went long last night.
Okay, so yeah.
Remember, I bought somewhere here. This is M1, so it looks a little bit weird to me. I bought that. So this is not going to, and I'm not even calculating that into whatever I did here. I'm strictly focusing on what I did here. It's just trade management at that point. It's not.
Yeah, you're sizing there. You're sizing of when to size, like bigger, smaller. Like you got the good ones there with bigger size, so like that one makes sense. I went larger at first, then I sized down on the winner, and then when I thought we had finally got to the key level and got CSD, then I just like I'll try and crawl back.
Or was he cutting out?
No.
I think it's not me.
No, it's me. It's for sure me.
Okay, cool. So, this is something that a lot of persons have said, and I think this might be the final comments, and then I'm really going to go and enjoy my emancipation, my Independence Day. This network is closing. I lost my train of thought. What was I going to say? I lost it. Wow.
We were talking about break even trades and stuff, Kish.
Break even trades. Yeah, what I was going to say is this is something that has been said a million times, but I'm going to say it one more time. While risk management is personal, there is an underlying fear for most persons that comes in the form of every time you take a trade, if you lose, size down. Every time you see a setup, risk the smallest percentage or whatever. I'm not against that idea. I'm not against proper risk management. But as you start to trade more and more, and you have a repertoire of setups, high probability setups, when do you decide how to size into trades? First year of trading, smallest risk, no problem. Second year, smallest risk, no problem. Third year, fourth year, fifth year. When do you decide that I now have a lot of data behind me that shows me that these setups
Close the door.
are higher probability, so I will size in on those.
Kish?
Yeah.
Just before we go, my plan, this is the bag, close it, lower.
So as I said before, I don't mind the short ideas that you have above here, but I don't like the idea of shorting up here. I'd rather do it down here.
It's dark pool territory.
Yeah, I'd rather dark pool territory. Above the highs in this condition just feels weird. Despite wanting that pullback. Like, how far up do they plan to take this pullback?
So we prefer to close below Tuesday's open and then look for retracement.
That's it. That's it.
Right.
That's it.
But
That's it.
buy side, sell side again, we look for that range again to form.
Yep. So for me, in a perfect world, we close here, pull back, and then we get short. That's what a perfect world look like. But unfortunately, I won't be around to capitalize on that. And I don't mind. I don't mind not being here to capitalize on this. If this candle closes and takes here, it's a potential trade, but I'm choosing for no reason outside of the fact that I don't want to trade anymore. I'm choosing to stop my day here. Not because the setup is not possible or anything, but I plan to have a short day today. So I'm gonna spend it with the family.
I planned for a short day as well.
When we all shorts. Short day for the beach.
Like
wear
I do
shorts.
think it is. I do think it's wildly impressive though. At times, like this will be now a one-sided day, Monday, or like a one-sided week to the up. And like the plan was a one-sided week to the downside. You still come out green from that. Like that to me is very impressive.
Well, I showed the execution, so
Yeah, no, I see it. I definitely see it. I'm not like saying that you didn't do it. You definitely got it.
don't stress
David,
it
maybe
too
we
much.
should try CFDs.
Can you try to save these, David?
Maybe I should just try and like work at McDonald's.
Oh man.
Hey, it worked for Trump and he's president.
Oh man.
That was a good one, Voodoo. Well done.
You guys are the best. But again, I am choosing to not do anything besides ending my day and walking away. If you trade and you find good setups, 100% kudos to you. If you choose to stay out, then still kudos to you. I still believe that we're going lower. Wait a minute. Who's this? Mike and Voodoo going short. See? There's nothing wrong with looking for setup. There's nothing wrong with making the decisions, but I'm just choosing to not do anything.
STDs for the win.
I wonder if Mohan did it too. So Mohan, you there?
I think he goes by Nimble Fingers now.
He's mute.
Mohan Nimble Fingers.
This Hobbit name.
Yeah. Yeah.
I think he's gone. Hey guys, for me again,
Yeah.
Done, not doing anything. Be careful, and we'll talk. Same time tomorrow.
Thanks, Kish. Enjoy the day.
Pleasure.